What if money wasn't just a tool for buying things? What if instead it was a form of energy, capable of being stored, transformed, directed to build futures we can only imagine? This isn't science fiction, it is the quiet, revolutionary story of financial innovation. We often think of progress as towering skyscrapers, gleaming smartphones, medical breakthroughs. But beneath every achievement lies an invisible architecture. It's an architecture of ideas about value, risk, trust. These ideas are the true engines of civilization. They allow us to pool our resources, share our burdens, and take monumental leaps of faith. This unseen engine constantly redefines our relationship with uncertainty. Think about it. Every major human endeavor is a gamble against the future. Financial innovation makes that gamble smarter. It transforms a reckless bet into a calculated investment. Imagine you are a merchant in ancient Babylon standing at the docks. Your precious cargo of grain textiles is being loaded onto a wooden ship destined for a port 1,000 miles away. You watch the vessel disappear over the horizon, pirate storms. Simple misfortune could send your entire fortune to the bottom of the sea. How could you possibly risk everything on such a perilous journey? For millennia, this was the paralyzing dilemma that capped the limits of trade and human interaction. The fear of total loss kept ships in port, kept civilizations isolated. The answer that emerged was a stroke of genius, an idea that echoes in our modern world. Merchants and financiers devised a new kind of agreement. A lender would provide the capital for the voyage, but with a clever twist. If the ship and its cargo returned safely, the merchant would repay the loan with a significant amount of interest, reflecting the high risk the lender had taken. However, if the ship was lost at sea, the debt was completely forgiven. This was not simply a loan, it was the birth of insurance. It was a financial tool that transformed a potentially ruinous gamble into a manageable business expense. The risk hadn't vanished, but its weight was now shared. What if a business could live forever? What if it could outlast its founders? What if it could raise its own funds? What if it could be treated like a person under the law? This is not a riddle, it's the limited liability corporation. Before this idea took hold, business owners were personally responsible for all debts. A factory burned down, a new venture found no customers, creditors could seize your home, creditors could seize your savings, creditors could take your personal belongings. That unlimited risk kept ventures tiny. Then the corporation changed everything. A legal person separate from its owners. It could own assets, it could sign contracts, it could incur debt. If the business failed, shareholders lost only what they invested. Personal assets stayed protected. Limited liability was a psychological masterstroke. It created a safety net. It brought a new class of investors. Ordinary people could now invest. That tweak unleashed massive industrial expansion. It pooled capital from thousands of anonymous investors. Capital and ambition was democratized. Have you ever wondered who funded the first computer? It wasn't a bank. Banks lend money to businesses with predictable cash flow and hard assets like buildings or inventory. But the pioneers tinkering in a Californian garage in the 1970s had none of that. They had a radical idea, a heap of electronics, and an almost fanatical belief in a future that few others could see. So how do you finance a dream that has no collateral, no sales history, and honestly a 90% chance of spectacular failure? How do you fund something that looks to the rest of the world like pure madness? This is the challenge that gave rise to one of the most dynamic forces in modern finance, venture capital. Venture capital is a distinct form of finance built for a specific kind of risk, the risk of innovation itself. Unlike a traditional investor, a venture capitalist or VC doesn't just provide money, they provide expertise, mentorship, and a network of connections. They invest in a portfolio of unproven, high-risk startups, fully expecting that most will fail. They are searching for the one or two companies in their portfolio that will deliver an exponential return on their investment. It is a high-stakes hunt for the black swan, the outlier that redefines what is possible. This model of funding has been the jet fuel for the technological revolution of the past 50 years. What if going into debt was not a sign of failure, but a crucial step toward building a better future. This is precisely what happened when governments began to see the strategic value in helping ordinary people and small businesses access capital. Consider the journey of a small business owner, a baker who wants to buy a larger oven. This is where government-backed loan programs come in. By guaranteeing a portion of the loan, the government effectively reduces the risk for the lender. This subtle intervention has a profound ripple effect across the entire economy. That baker gets her new oven, hires an assistant. In each case, a small strategically supported debt has become a catalyst for a chain reaction of economic activity. Imagine a world where you could send money to anyone, anywhere on the planet almost instantly without a middleman. This isn't a distant future, it's the promise of the next great wave of financial innovation. Powered by technologies like blockchain, we are standing at the threshold of a fundamental re-engineering of the most important commodity in finance, trust. It proposes a decentralized system. This makes the record incredibly secure and transparent. It is in essence a way of creating trust through mathematics and code. As with every financial innovation before it, the road to adoption will be long and fraught with challenges, but the core idea is too powerful to ignore. So where does this long-winding story of financial innovation leave us? It leaves us in a world built on layers of accumulated ideas about risk, from the ancient merchant sharing the peril of a sea voyage to the modern venture capitalist funding a long-shot startup. Progress has always been tied to our willingness to find new ways to confront uncertainty. The key insight is that financial innovation is fundamentally an act of reframing. This journey is far from over. The challenges of our own time, from financing the global transition to renewable energy, will demand a new generation of financial innovations, and this is where you come in. Understanding this story is not just an academic exercise, it is a vital part of modern citizenship. By appreciating how these invisible financial structures shape our world, you become a more informed participant in the economy and in society. The story of financial innovation is your story, and its next chapter is still waiting to be written.